Welcome, ARMR Insiders, to the in-game update. Thanks for joining. We're going to go over changes to the portfolio. We've made a lot in the last really 2 trading sessions. So I want to walk you through step by step what we're thinking, how we're balancing the portfolio going into the Jackson Hole meeting over the weekend. And so without further ado, let's just remember what we're talking about here is the ARMR Investing Way. It's how I manage my own personal portfolio. Okay, so you got to still make your own decisions, right? This is about your risk tolerance, your goals. So take this ARMR portfolio, take this ARMR Investing Way information and make it your own. Use what works for you in your process, okay? And of course, for us, it's a 3-stage process. We build our whiteboard, then we use algorithms to find our entry points, and then we use stop losses to protect ourselves from ourselves. That's how we do it here. So everything I'm going to share with you, all the stocks that I'm buying, all the excitement I've got to share on what I'm buying and why, does not negate the fact that if it hits a stop, we're out. Okay. And so we're going to go over and talk about that right now. So let's dive in. Made some big changes starting yesterday. We are balancing a portfolio. We've got half of our assets focused on big cap, lower beta, dividend type of names. Okay. Then we have the other half of the portfolio, which was primarily cash 2 days ago. And we're putting that cash to work in aggressive, disruptive growth stocks. Okay. So that's the 2 sides of our portfolio. We also have a focus on, and this is the strangest market I've ever seen, utility stocks, because we're picking up the yield and the stocks are going up. So principal's increasing while we pick up yield, but we're also adding financial stocks. So it's very rare you see financials and utilities both go up at the same time. And what we're seeing is a convergence on Jackson Hole, right? So you'd think after the meeting, if the Fed says anything about the direction of monetary supply, interest rates, anything, that one of those 2 sectors is going to go up and one's going to go down. And so, I mean, could they both keep levitating together and going up? I guess this is like a Goldilocks market, okay? But we are creating some balance there. So let's just go through the moves today to help you stay on top of what what we're doing and how we see the world. So first of all, we talked this morning in the morning call about the markets, and what I said was we expect a quiet day trading between the first Fibonacci up and down on the day on the S&P and the NASDAQ. Right. So the first fib up is right here, which happens to be this purple line, which is the spot gamma location right here. And down here would have been the bottom, the first Fibonacci down on the day. So as you can see, we're just trading right now on top of the top of that channel. And I expect it to close somewhere inside that channel. On the flip side, the NASDAQ 100, and we can blow this up a little more since the day is kind of so boring on the big indexes for a change. Okay. So what you're seeing is a tight trading range, and this has kind of been touching the bottom of the expected range, which is the first Fibonacci down from the opening range, right? The real thing that's been surprising and a wonderful welcome surprise is the rip higher in small caps. So now let's go look at the market in general. We'll get to Novavax in a minute. But I just wanted to say a couple things. Here's the small cap index. So here we are. Okay, y'all, we made money on puts. We were short last week on small caps, made money on that, covered it right at the 200-day moving average. And now there's been a 4-day up move in the small cap index, putting a double bottom in at the 200-day. And now if it can close above the 50-day, that would be real bullish. Okay, so the ARMR index only portfolio is still long the NASDAQ, the S&P, and the Dow. But should this continue in the small caps, and I'll show you a couple others, the IBD 50, right here, you can see breaking out of the pennant, the momentum index breaking out of its pennant, even the value index, which we haven't seen offer any real entry points, coming out of this double bottom, coming up back above, okay, the 50-day. It's very possible by the end of this week that we own all of those indexes in the ARMR index only portfolio, which would give us a risk on green signal, right? Right now we're risk on yellow, which means we can put money to work, but we're kind of managing risk. So right now what we see is a knee-jerk bounce off of OpX last week. So the market sold off into options expiration, bounces after expiration. Then we're going to go into the weekend. Thursday, Friday, I would expect lower prices in the market heading into Jackson Hole as market players try to hedge risk. Okay, so I'm not chasing these indexes as they run 4 days in a row, but on weakness back down to key support levels, we might be adding those positions, and we'll have to update you, and we'll stay in touch, of course, over the next couple of days. So moving on from that's the index look. What we've been doing is shifting capital to our more aggressive dynamic growth stocks, right? So we bought shares of DraftKings, and it doesn't get any better than that setup. We caught it day one of this 3-day move. They would call this 3 white soldiers in candlestick charting. That's a very powerful situation, okay? While we were making money here, it became the classic taking candy away from a baby. I mean, there's literally like a little baby sitting there with a bowl of candy on Penn National Gaming yesterday. And we picked that up yesterday, made money before it even, closed higher. We picked it up in the morning, captured that upside, and then the whole thing blew out today. That was a no-brainer, okay? What's on the whiteboard that we might add to the portfolio? I think MGM, after that move on those 2 stocks, I don't own MGM and I'm not chasing it here, but if it pulls back to the 50 on some weakness in the next couple of days, we might add that, and that would be our trifecta, if you will, of casino plays, gambling plays, what have you. Okay? Moving on. I'm not going to go over the whole portfolio, but I do want to go over changes from today. So we've been, let me talk to you for a second. We had a large allocation to big cap pharma. We own 6 stocks in the big cap pharma space. So what I did today is cut that exposure down. This is simple managing of a portfolio, rebalancing, if you will. On a whole, those 6 stocks have made us money. So what we're doing is reducing them all the same amount, booking some profits on the position, bringing them back down into normal range. In other words, we had an overexposure to big pharma for the last couple of weeks, and we brought it back down to a normal range, okay? And I'm taking the money that we've booked here, and I'm rotating it into a little more financial, okay? And here's why. First of all, we own Chubb, okay? We own Chubb here. And Chubb, hang on a sec, guys, don't go away. Just got to exit a position. Hang on a second. Hang on just a second. Just trading as we talk. This is a live trading desk, so I got to make decisions. My eyes are on 4 different screens as I sit here. So just want to make sure I'm doing what's got to be done. Just a second, bear with me. All right, hang on, almost done. Okay, good. Getting back to our portfolio. So you can see Chubb breaking out. We had this really great setup. We bought this cheap, okay, tight inside this pennant. Right in here is where we bought it, and it popped up. Does this chart remind you of anything? If it does, if it doesn't, let me show you what I'm talking about. There's Pfizer. We bought Pfizer tight in the base here, and the thing blew out. Right? So we bought Chubb tight in this base right here, and it's gone straight up. Okay? So what we want to do is lean into what's working in the portfolio. And what we're adding to the portfolio today is Hartford. Now, what we're doing is adding two cup and handle formations. You can see the cup right here, the handle right there. Now, you might have forgotten this, but this big rally up on one day back in, what was it, March, back in March, occurred because Chubb made an unsolicited bid for Hartford. Okay, the bid was rejected. Now, I don't know if there's another bid coming. Okay, I don't know that. But what I do know when I'm looking to add other insurance companies is that Chubb's done the research for me. They've done the fundamental research. They've identified Hartford and their business model as valuable at these prices. So if I want to add to insurance, that's a no-brainer for me. I think that cup and handle breaks out. And if we get lucky and there's another bid that comes out for the company, well, so be it. You know, that's the old saying. I can't remember exactly how it goes, but something about you make your own luck, right? Is that what it is? Right. You make your own luck. All right. Also coming from our research department, we think this is a value play in the financial, in the insurance space, CNA. Okay. Another cup, another handle, buying it right on top of the 50-day moving average. The 200-day moving average. Coming through right there. Buying it early. Hasn't even broken out yet. Okay. So those are two examples that we're adding to our financial part of our portfolio to balance it. Because what we have in the portfolio, we own XLU tight to the base in here as it's breaking out, right? We own shares of Duke, already paid us a fat dividend, okay? And we own shares of Southern Company. So now we have balance. We've got financials through insurance balanced out with our utilities, and we're kind of ready to go no matter what takes place over the weekend. Also, you know, there's a lot of different banks you can add. Banks are going up. Let's look at a couple of charts. Okay. KRE looks great, right? This is regional banks, right? KBE, the banking index, looks great, right? The whole financials. XLF looks like it's breaking out again. Okay, so you can add any of those names. What I like to do if I'm going to add an individual stock is I want some type of growth driver that separates it from the pack. Otherwise, I'll just buy the pack and buy an ETF to get coverage. Okay. So as an example, let's say, why did I buy Duke and Southern Company? Because Duke and Southern Company have a higher yield than other names in XLU. I wanted to increase my yield, and I think those are both quality companies, so I added them, right? There was a reason there to add the individual name. So if I'm going to add a bank, I'm going to add something like Signature Bank, right? Because Signature Bank goes up with the financials, and it also has a major foothold in the blockchain cryptocurrency world. There's a reason, there's a real driver of their business going forward, right? That could accelerate this chart pattern breakout that looks like it's about to occur. All right. So that's a stock that'll be in our portfolio. So just to wrap up, hang on a second. Order filled, you can hear it. All right. So just to wrap up, what we've done is added some financial, reduced some pharmaceuticals because we had an over allotment there and we just brought it back into alignment. Okay. Another situation, PLTR. We added the stock yesterday. I took it off immediately when I saw the story hit the tape. So we ended up selling it. There was this big down bar. It bounced up for a bar. We sold the position right here. Okay. So this is a classic situation of I'm going to shoot first and ask questions later. I saw the story hit the tape having something to do with a breach of conduct, the FBI seeing things they're not supposed to see, whatever. I don't care what the reason is. There's follow-on stories have come out talking about how it's not a problem with PLTR. It's a problem with how the FBI was using the product. I really don't care. I'm not going to sit around and wait and try to figure out what that story is. I'm just going to step aside real quick. And one thing I like to do is I like to use this ARMR moving average as my guide for a short-term stop. If I put a trade on, which we did yesterday, right? And the stock was performing okay, and then it craters below the ATR, the ARMR moving average for some reason, I just step out, try to figure out what's going on. Now, if this chart pattern, the daily pattern, holds up in this pennant and we get another risk-on opportunity, I could always add it back to the portfolio. But I always like to err on the side of protecting my capital first. Okay, so if something strange happens, that's why I sit here all day and I monitor the portfolio. So the rest of you don't have to. If something happens, I send out an email alert. I talked about it on Slack immediately on our Slack trading desk. So if you're following along, you know what I'm doing. And so that's why I took it out. And then I'm going to read all the stories tonight, and I'll figure out what's going on. And if it's a whole bunch of nothing, I can always put the trade back on. All right, maybe I still want this investment, but for now, stepping aside and protecting my capital. That's step one of the ARMR Investing Way. On the flip side, this morning, thanks for that, Miguel. I appreciate that. On the flip side, this morning, I'd like to say that the ARMR report is what really makes it great to me is that in the Slack room on our trading desk together, we're all an army of analysts. Right now, it's followed up by a tank division of algorithms that I provide. But the more eyes on the situations, the better we are as a group. And some of you guys are fantastic, and you know who you are. Okay, others are learning, and you're going to learn the process, right? And you're going to start to figure out which ARMR insider is of real value, right? There's a bunch of you guys out there that are literally analysts, and so want to give a shout out, right, to Erez for this morning's reminder. Okay, I have Deere on my list as something I want to own because of that setup. And they announced earnings, the stock imploded for no apparent reason, comes back above the 50. And Erez says, hey, don't forget Deere this morning, right? As it came across the ARMR moving average, that was the no-brainer entry point. And we put the trade on, and this is an investment, not just a trade. And the stock has since just skyrocketed. Now, I don't know where it's going to close, and you could always day trade it and book a gain. That's not what I'm doing. As it turns out, they announced they're increasing their dividend 17%, and that doesn't hurt any matter, the matters either. But this is a perfect example of all of us working together, eyes on everywhere, sharing information in the Slack room. And when we got that, the question, Erez says, hey, what about Deere? Right? Because we're looking for ideas to day trade or invest in. And it's set up perfect on the ARMR day trade algorithm right there as it crosses the yellow line here, the ARMR moving average. So it allowed us to enter the position right there. Now, the stock has run up. I might increase the position size on weakness. I almost hope it comes down into the close. I can increase it a bit. But this is one of those stories I just love. It's a little cup, a little handle. It's breaking out. But what's really going on here is you got Deere. I talk about investing, what makes it to my whiteboard. And one of the major reasons a stock gets to the whiteboard is that there's a new part of their business that's going to bring in more investors and very enthusiastic investors. In the case of Deere, they're about to launch into a new product upgrade cycle where, I don't know if it's a year or two from now, could be a little bit longer, but between now and when this happens, you're going to see a dramatic shift. I mean, this is not like the cotton gin, but it sure feels like it could be something like that. Okay. This is not, maybe as big as the Industrial Revolution, but you're going from farm equipment operated by humans to farm equipment operated by robots, okay? Freeing up the farmer to do other things. It's like a paradigmatic shift in farming, and this company's at the front of it. So you see a cup and handle like that. You got a gift of a breakdown after a great earnings number. Who knows why anyone sold it? It's a great earnings number, right? And so we dropped right into that position this morning using our day trading algo when an ARMR analyst reminded us of the stock. So that's how it all comes together. All right, so those are the changes to the portfolio. Couple of names that are on my wish list that I'd like to add to the portfolio. And I may add is Novavax. I've got my eye on VIR, VIR. These are some more aggressive names, and of course the MGM I'm looking at. So open it up to questions. What do you got for me? Looks like, so there's VIR. You were looking at me as I was looking at charts. I hate when I do that. And here's Novavax. Okay, so I'm looking to get into those two positions, perhaps. And of course the MGM I want to add on weakness. Okay. But let's get to your questions. What are you looking at? So PATH. All right, Erez, I'll take a peek at this. I haven't done any research on it. If it's something you think is valuable, I'll take a peek and see if there's, what do I usually say? So that's not really a chart pattern that attracts me. So I'd have to find out why it's attracting you and what the fundamentals are before I could really make any comments there. All right, so we see that Western Digital might be in the midst of an acquisition or being acquired by or joining forces with. So that stock is up today, and it's helping out Micron, which is a favorite of our trading desk. Or I should say a favorite of one of our ARMR analysts. I still have Micron on the list. I'd love to own it. I'd love to catch it right. But that pattern just doesn't intrigue me yet. What I like to do when I add a stock to a portfolio is I want to see higher highs and higher lows. So I see a downtrend here. And then what I want to see is the bottom, it's going to run off the lows, come down and test, make a higher low, give us a risk on entry point using the ARMR algo. Boom, I'll put the position on. But I don't just buy them when they do this and hope that it's an island reversal type of situation. I just won't do that. So I'll either buy it after it runs and pulls back, or if it's one of those things that just skyrockets up to this level and then makes a tight pattern, I would do that, and I would use a stop a lot higher. Okay, so there's nothing on MU I'm ready to do yet. Am I out of CLF? CLF was a day trade that we booked a profit in. So I think I mentioned that. If you're following me along on the day trading side, we put this trade on right here. There was the median bar reversal. We added it right here, median bar reversal. It ran up. We raised our stop, and we got taken out of the stock somewhere, I think right here, actually, when it broke below the first standard deviation, that yellow line. The first standard deviation above the VWAP, which is the black dots. And so when it takes that out, we book whatever profit we have left in the stock, and it hasn't gone anywhere. So I don't own CLF, and I'm not going to. Okay. If small caps are going to go up, I'm glad glad you just asked this question, Chad. So if small caps are going to go up, is it ever going to be time for cannabis again? So without a doubt, I want to own cannabis again. Don't let me miss it. I'm not going to miss it. I look at it every single day. So there's again, where's the higher low, higher high? This is just lower lows, lower highs stuck in a downtrend. So before I buy anything, I need to see it break a downtrend and then either make a double bottom or a higher low with a buy signal that comes with it. Okay. And so that's just not there yet. There's just nothing there. There's nothing there in cannabis right now. This is the very definition of trying to catch a falling knife. And I don't do that. I like to have all my fingers intact. If you're interested in cannabis, don't tell anybody what's happening in Altria. It's coiling with a 7+% yield. Love that idea. Oh my goodness. Miguel wants to look at the precious metal stocks. Okay, well, we added shares of Sprott Physical Gold the other day. which we're actually losing a little bit of money on. All right. So that's our first foray with a small position, probably half a position size there. I'd love to double the position size if it gives me a reason. There's the higher low that I talk about. There's a low here, higher low there. Okay. Broke the downtrend here. And even this is a shakeout. This is a shakeout below this, this level right here, right? So it shook out below and immediately reversed. That's great. I love that setup. So we're long physical gold. So do I want to be long GDX? Well, I just don't yet. Now, this could be a double bottom, right? But look at the difference in these chart patterns. This is still making lower lows and lower highs, whereas Sprott physical gold is making higher lows. Oops. See? Well, okay, not higher lows, but at the very least, it's made a shakeout double bottom, right? And it held the low of June. Let's look at GDX again. See, not holding the low of June, breaking down. I just can't do it right now. And one, we've been talking with Silver Fox about it, our resident precious metals guru, if you will. And his reasoning, his thinking here of why these are really underperforming the metal is that we've got a bunch of countries around the world that are talking about, kind of nationalizing, precious metals reserves. What is it? Chile and Peru. I mean, that kind of makes it difficult to understand the value of some of the miners who have a lot of properties in those countries. So I'm sure it won't hold the stocks back if gold really takes off. But for right now, I mean, even silver looks like totally. There's no reason to own silver for me. I mean, maybe it's going to make a little bottom here, but not right now for me. Held the low. March held the March low. It's possible it's making a double bottom, and it's certainly holding to that green line right there. It's holding that low right now, but I'd like to see it pop up, pull back, and make another higher low and give. See how it did it here, Miguel? Look what it did right here. It touched the line, rallied up, pulled back. That was the entry point I liked, and then it took off, and we actually made money on that trade. So it hasn't done that yet. Even this was a nice, tiny little tight pennant. You could have bought that, but it hasn't done that yet. So there's just nothing for me to do right here. I love it. I love it. Thanks so much for that. Chad is writing, he's proud of me. I finally nailed my nemesis at DraftKings. It's so true. I tried trading this thing before, and it just never really set up for me. And I just, and guess what? I didn't miss anything other than a couple of good swing trades. From an investment standpoint, it came all the way back down, set up properly. Then I could put the trade on, correctly. And now we're into hopefully a monster trade there. Let's see. Any other questions you guys have? Look at HUT. Yeah, I mean, my favorite names in the space, of course, are going to be the guys who get paid per transactions, the banks that are setting up. So I like Silvergate. Like I was saying earlier, I like the SBNY. And my favorite play is Coinbase. I keep looking for that entry, and it's early. I mean, I usually don't buy stocks this early in their life cycle. It's much better to get at least 6 months under your belt. But they had a really good earnings announcement. Stock gapped up on it, and it gave away all of those gains. And it's made a higher low at the 50-day moving average, and that's why I'm putting that trade on right here. MDB. Oh, geez, look at that setup. Oh, God, that's a good-looking chart pattern. I like the story. I like the story a lot there. Let me just check something out. They already announced earnings in 8 days. The stock gap down here on the public. Oh, they raised more cash. I mean, I'm not going to. That's a great pattern, though. I mean, don't let me stop you. I'm not adding that name right now, but maybe I should be. I'll go look at that again. MELI. Yeah. Pattern looks good. I mean, I'm trying to identify names and I'm buying them right here on the 200-day before they break out. I don't want to chase things, but certainly if you're on it, you did well. Now Dropbox. So I'm making money in DraftKings, and you guys are ribbing me on the stocks that I've been in and out of a little bit. Yeah, Dropbox, that's not giving me the entry. DraftKings just did. Sprott Gold Miners. Sprott Gold Miners and SDGM. SDGM. Is that? I don't know. That symbol doesn't come up for me. SG. Yeah, maybe that's the symbol. Yeah. Sprott Miners. Yeah, I'll probably trade GDX because I like the liquidity there better, Camille. Interesting chart patterns. Royal Bank of Canada looks interesting. Deutsche Bank. We don't want to get involved in Deutsche Bank. All right. So we'll end on a little chart point of our own. I think it's going to have to be Penn. That's just a beautiful breakout. Oh God, we got that right. So that's lots of fun. Portfolio still is carrying some cash. I probably don't put that cash to work until the market sells off into what I think is going to be a non-event of a Jackson Hole meeting. I'll be honest with you. I think that I think the Fed's going to take more time. He seems to take more time talking about COVID restrictions and how that may hurt the economy going forward than he does actually talking about tapering. Like I don't think after the Fed created a taper tantrum, what was it, 2015, when Bernanke started talking about tapering, I think it was him, at Jackson Hole, and it wrecked the market. I mean, they know everybody stares at the Jackson Hole meeting. And every year everyone goes, oh, geez, Jackson Hole. And every year since that implosion, they don't say anything at Jackson Hole. So my guess is nothing's going to be talked about at Jackson Hole. They'll talk about how the Delta variant's running rampant and what does that do to the economy. They'll make the same hackneyed phrases about should things pick up and blah, blah, blah. And then we know what we're going to do to taper. And at the end of the day, it's going to be a big nothing. Okay. That's my personal opinion. Of course, I could be wrong. And it'll just continue to be a Goldilocks market is what it is. There's tail risk. The tail risk is that I'm wrong when I just said, and they lay out their plan and they're going to start tapering in September. The market will implode, right? It's possible he does it. Who knows? Maybe he wants to squeeze 10 to 20% out of the indexes that are just melting up because they think he, will be releasing easy money from a helicopter forever. So who knows? Maybe he wants to shake out the market. But that's a tail risk. That's not a high percentage bet. So what I'm not interested in buying volatility. I'm not interested in buying puts into the weekend. That's just always a waste of money, except for the 1 in 100 times where some comment comes out. So what I'm trying to do with my money is I've got some cash, I've got some precious metals, got some, utilities, got some financials, got some dynamic growth. I'm creating a portfolio that I hope can live through whatever the gyrations are, unless it's some massive risk off trade where everything goes down. That's just the way it went. I can't worry about that. I mean, you can can come up with fears all the time if you want. Anyway, so those are my thoughts for today. Any last questions you guys have? I'll be happy to answer it. If not, we will move on. All right, a couple of questions. Looks like SENS. Oh, yeah, I really like the story. Wait, chart pattern doesn't look bad. I mean, I don't think, yeah, glucose monitoring, right. Yeah, not a bad pattern. Something to keep our eye on. Travelers is a must own, according to Silver Fox. Well, it's just a question of how much financial you want, or, there's nothing wrong with that pattern. You can certainly own it. I mean, I don't disagree with you. Look at it come out there. I mean, I'm not going to pay up for it here, but should we get, a sell off, into the weekend that takes it back down towards the top of the base, and we want to increase our financial exposure, we can always add that to the list. All right. Okay, guys, listen, I appreciate, as always, your time spent with me, and all the work you all do in the Slack room, making it a really rich environment. I appreciate the time you guys are spending with me. See you all. What day is tomorrow? I'm going to be off the desk tomorrow, and I probably won't be back on the trading desk until the afternoon. So there won't be a morning call, and I'll be out of pocket completely until the afternoon. So you guys hold it together for me. I'll see you when I get back. I guess we'll do maybe an in-game update. Depends on what time I get back to my desk. All right. Have a great night. I'll be updating the portfolio update channel of the Slack room at 3:45 with the end of day changes that we talked about here on this call. All right. Take care, guys. I'll see you on the flip side.